Now, there are hundreds of indicators on TradingView that promise to help you find a trend, but let's be honest, most of them either lag too much or give you mixed signals. But what if I told you there's a brand new indicator that just dropped on TradingView that changes the game when it comes to spotting trends? Yeah, you'll want to stick around for this one. This tool is accurate, simple, and gives clean visual cues without overcomplicating things. Well, let's jump into it. So, I'm in TradingView, and I will be using this platform throughout this video. I'm going to be using GBP/USD trading chart on a time frame of 30 minutes. Just for the sake of example, you can use this indicator on any asset of your liking, as I will be explaining the core concept and usage of this indicator. To add this amazing indicator, go to the Indicators tab from here. Here, search for Commodity Trend Reactor. It's a brand new script created by Big Beluga. Add this one to the trading chart, and once you add it to the trading chart, it immediately starts painting a clear picture of market direction. And you will notice some other components on the trading chart that I will address gradually throughout the video. First of all, before that, let's fine-tune the settings so it doesn't react to every little wiggle in the market. You can open the settings of the indicator from here. Go to the Input tab, and the only thing you will have to change here is the CCI length to 200. This smooths out the noise and focuses on the bigger trend. We've got the trail line length, which controls how responsive the trend line is on the chart. A smaller number makes it hug price action tighter, while a bigger number smooths it out more. Then there's upper level threshold and lower level threshold. By default, they're set to 50 and -50. These are the key zones for trend confirmation. If the CCI line is above 50, that's bullish territory. Below -50, that's bearish. These thresholds are basically telling the indicator when to shift bias from bullish to bearish and vice versa. You can tweak these if you want more aggressive or conservative signals, but I usually keep them default unless I'm testing something specific. And finally, we've got style settings. That's where you can change the color or thickness of the lines. Nothing to tweak in terms of logic, just visuals. So here's how it works. The core of this indicator is built on the classic CCI, Commodity Channel Index. There's a main line that fluctuates above and below two levels, 50 and -50. When the line is above 50, it means we're in a bullish environment. Momentum is on the upside, and if it drops below -50, we're looking at bearish pressure and downside momentum.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Simple. Now, we're not using these levels as buy or sell signals directly. That's not what this indicator is for. It's for identifying the direction you should be trading in. So when the line is above 50, you only want to look for buy setups. When it's below 50, you only look for sell setups. That's it. But here's where this indicator gets really slick. It also paints a visual trend line directly on the price chart. When the CCI line goes above 50, you'll see a green line appear below the price, kind of like a super trend indicator. It stays green as long as the CCI doesn't dip below -50. That means during small pullbacks or consolidations, it doesn't flip and confuse you. It stays locked on the trend until there's actual confirmation that momentum has shifted. And the same thing happens in a downtrend. When the CCI line drops below -50, an orange line appears above the price, signaling a downtrend. That orange line will stay there until the CCI climbs back above 50. No flipping back and forth, no confusion. You'll also notice a few signals popping up on the trading chart, like these. These show up when the CCI goes above 200 or drops below -200. These are potential overbought or oversold conditions, and while they can signal a reversal, you should never trade them blindly. These are just alerts that something might be changing, but it's not a green light to enter. For confirmation, you need to combine them with something like divergence. For example, one way is when price makes a lower low, but the oscillator makes a higher low. That's bullish divergence. It means selling pressure is weakening. You might see a reversal and you can open a buy trade over here. But again, not always these signals work. Sometimes price just ranges or continues its trend after faking out. Let me give you an example. Look here. The price creates a lower low, but the oscillator forms a higher low. Classic bullish divergence. The indicator also throws a signal here, suggesting a potential reversal, but instead of price launching upward, it just goes downwards, and then in a range. So we don't rely only on divergence. What we want to see is structure breaking. If price breaks the previous swing high in a downtrend after divergence, that tells you the structure is shifting. That's your actual confirmation that we might be entering a new uptrend. That's how you combine signals and context. Now let me show you how to use this indicator in an amazing trading strategy. Remember, the commodity trend reactor tells us the trend. We trade only in that direction. So if it's green and the trend line is below the price, we're looking for buy trades. If it's orange and the line is above the price, we're looking for sell trades. To find precise entries, we're going to add a second indicator to confirm the move. For that, we will open the Indicators tab from here again. Here's Search for Andean Oscillator. This is the one I'm talking about, the one created by Alex Grover. Once it's on the trading chart, you'll see three lines, green, red, and orange. This is a momentum and direction tool. When the green colored line is on top, the market is moving up, and when the red colored line is on top, the market is moving downwards. When orange colored line is above both green and red lines, the market is considered flat. Let's quickly go through some examples. For a buy setup, we want to see the green line cross above the red line first and then cross above the orange line. That's our entry trigger. We want a fresh crossover, not a double dip where green dips below and then comes back up. That stuff is noisy and risk to clean, fresh breakouts for best results. So in an uptrend confirmed by the commodity trend reactor, we wait for the green Andean line to cross above red, then orange. That's our buy entry. So we can open a buy trade over here. We can place the stop loss below the previous swing low and go for a risk to reward of 2:1. The same rules and conditions will go for a sell trade, but opposite. When the trend is orange, meaning we're in a downtrend, wait for the red Andean line to cross above green, then above orange, just like we can see we got over here. That's your sell trade entry. The stop loss for sell trades can go above the last swing high, and again, aim for a 2:1 reward. Now, here's something cool. This combo even works surprisingly well in range-bound markets. Usually trend-following systems fail miserably in sideways price action. But the way these two indicators filter signals helps avoid a lot of choppy setups. During ranges, you'll notice that despite the color changing between green and orange, the Andean oscillator doesn't give many signals. That's exactly what we want: fewer trades, better quality. That's it for this video. If you've got questions, drop them in the comments. I always check them and I'll get back to you. And if you found this valuable, do me a favor, hit the subscribe button and turn on the bell so you don't miss the next strategy. Thanks for watching the video. Till the end, I'll see you guys in the next video.